Hey everyone, John and Ray here, slingshotfutures.com, and welcome to the Market Mindset, where we take a look at the psychology behind the moves today so that we can better understand tomorrow. And today we're taking a look at the Forex pair, the dollar-yen. Now, the dollar-yen kicked off the morning with a fairly nice bullish run higher. It didn't stop since yesterday afternoon, and it's continued that drive up. Now, when we come in, we're looking at starting the Forex trading stuff at around 7 o'clock, and that's after all of this has happened. It's going to be a little bit more difficult to kind of figure out what we need to do to get in at the best price. We're very high, and that's a pretty obvious statement given that the buyers are no longer making new highs. They're pulling back to the moving average and still not making new highs. So what we need to do is we need to look to buy as low as possible. We get the buyers to come in, they find support off of the moving average, nice bouncing going on there, but they fail to make a new high. When we see the sellers try to come back down again, the buyers respond with weak bullishness directly into strong bullishness. And that allows the buyers to jump on in and force the market back up to try to finish that job off. Now, the overall momentum to the upside, probably limited once we get back to the highs. All of the buyers who've been buying into this pullback, maybe even buying back here and here and here and hanging on, they're going to look to exit when it hits that high. So I'm not expecting a huge amount of follow through here, but we're looking to buy the pullback for at least a quick move up. Once we hit that move up, as anticipated, it doesn't get any real movement through there, and we get a nice pullback once again. Now this pullback, very heavy bearishness, right? Big drop lower from the sellers, but then where did they go, right? All the sellers completely just disappeared. They slammed the market down, really big bear candle, and then poof, just like that, they're gone. That's a big clue. That shows us that really this selling pressure was likely just a trap to get sellers involved. And along with that, buyers, a good chunk of buyers, taking profit when they think that we may be a little high, potentially going into a range. So that causes the market to dip lower. And where do we expect it to dip? Trapping lows, right? Buyers want to buy cheap. They don't want to buy way up here anymore. And that's, well, pretty obvious. Now, whenever you have this big spike up and they begin going into this spike and channel type movement, you expect them to go back to around where that spike and channel kind of started the channeling phase. We found support there earlier, and now they came back down again, and they're dipping into that. And you can see as soon as they start hitting it, the buyers start digging in. Now, we get this big drop down once again, and that closes underneath the lows of that most recent swing low. And this is one of the setups that we actually go over in the tutorial course talking about twin reversals. We have a big close that closes its way through an area of support, and then immediately, as if the market saw it as a mistake, closes it right back up again and calls the market's bluff, right? They say, oh, you know what? That breakout doesn't look so hot anymore. Sellers, I don't believe you. We're going in the other direction. Now, it's really difficult to be a buyer right there. That's what we always say, being first to the party. A little bit difficult, but as you see the buyers continue to push and continue to push and continue to push, then you start getting reasons to become buyers inside of here. The stop for those types of scenarios, it's going to be underneath the low, because if that breaks, then there's a problem, right? That twin reversal off of the base, all of a sudden now it's completely invalid, and that should see the sellers continue lower. So buying into this move, expecting continuation up, buying, expecting continuation up, a big sell drive down, terrible follow through, another good reason to expect continuation up. And notice what's happening, right? What happened here? We twin reversal out of that swing low. They came back to retest it. All of the sellers that tried selling it for a breakout were able to get out at break even. And that is the rest of the sellers out of the way. And then the market is free to rip. We get a beautiful bounce off of that area, big doji kind of in the middle there, and then they followed up with another strong bull candle. It's again another reason to jump in. And if you've been waiting and waiting and waiting, you finally get a little pause in the market, another doji into a strong bull breakout move, and that finishes that breakout drive off towards the highs. So just a phenomenal example of utilizing market psychology and technical analysis to find the best setup opportunities today. If you weren't careful, a lot of traders probably got stuck in some of these moves. A good example would probably be right here. We just broke to a new high. We're pulling back to the moving average. Buyers will start buying into this. But what do we know? Well, if we're in a range, that's the last place I want to be buying. You're buying at the highs of the range. No good. You need to be looking for better prices until they can start proving that they want to break out. Now over here, that's not so much of a problem because we know all of the sellers are out of the way. So paying attention to where both sides are trading gave you a lot of clues today on the dollar yen, and overall just a phenomenal day of trading. So that's going to do it for this one. Hopefully you learned something. Hopefully you found it interesting, and we'll see you tomorrow.